Christopher Whalen, chairman of Whalen Global Advisors and author of Inflated, Money, Debt, and the American Dream, discusses the evolving U.S. financial landscape, the Federal Reserve's direction, and Donald Trump's economic influence. He notes that the Federal Reserve, Fed, faces conflicting data, making it hard to decide whether to cut or hold interest rates. With significant debt in commercial real estate and private equity, defaults loom as refinancing becomes difficult. However, consumer credit remains stable, defying recession forecasts. Whalen sees this environment as a major investment opportunity. Trump's frustration with Fed Chair Jerome Powell is expected. Whalen views Trump's negotiation tactics, especially with trade partners like China, as classic behavior. He believes Trump will compromise on less strategic partners but remain firm with adversaries. If rates are cut, Whalen expects banks to benefit, while non-banks may suffer as refinancing surges. The housing market remains unstable, with 60% of home sales involving people exiting the market due to unaffordability, a stark increase from historical norms. A weaker U.S. dollar, desired by Trump, would help American manufacturers by making exports more competitive. Whalen likens Trump's approach to Andrew Jackson, suggesting a return to pre-Bretton Woods policies. The dollar's global dominance, while beneficial, imposes inflation costs on American consumers. Trump's ambitions challenge this system, and while bold, are not unfounded. Global confidence in the dollar has waned. Whalen notes that the Fed's top priority is not inflation or employment, but keeping the U.S. Treasury bond market functioning. This market, created in the 1950s, now relies heavily on leveraged hedge funds, making it fragile. If it falters, borrowing costs rise, banks are forced to absorb more debt, and the financial system becomes increasingly repressed, echoing post-WW2 conditions when government bonds dominated bank portfolios. He argues that Congress's inability to manage fiscal policy is a core issue. The U.S. monetary system equates money with government debt, and with excessive spending, the Fed will be forced to monetize more debt, essentially printing money. Whalen believes a fiscal reckoning is coming, with entitlements and defense spending eventually facing cuts. Trump may be the catalyst, seeing the need to end unsustainable borrowing. Gold plays an important symbolic and stabilizing role. Whalen supports ideas like gold-linked bonds and regular gold purchases by the Treasury to anchor value. He doesn't foresee a return to convertibility, but sees gold and even silver as important hedges. He anticipates the Bank for International Settlements will recognize gold as a high-quality liquid asset, further legitimizing its role in the financial system. Real estate is poised for a reset around 2027-2028, with prices possibly returning to 2021 levels. Supply remains constrained in affordable markets but overbuilt in higher-priced segments. As rates fall, refinancing booms may return briefly before another correction. Ultimately, Whalen emphasizes preparation. Trump's team is highly organized, and the next administration will push detailed economic reforms. Amid volatility, investors should stay informed, reevaluate assets, and prepare for structural shifts in global finance.